Welcome back to another episode. My name is Jose Najarro. I am a long-term market investor who's pretty much just looking to get my money to work for me. So if you guys are familiar, on the weekend I drop a series where I take a look at 4 stocks I'm thinking about buying the upcoming week. And that usually takes me some time, right? I don't just pick random 4 stocks and just try to make a video. But instead, so that video comes out tomorrow. But before that, I actually wanted to do 2 stocks or X amount of stocks that almost made the list, right? I have a huge list. Usually goes from, I wouldn't say 6 to 7 stocks. And then I kind of break it down some more, until I finally end up with my 4. And these are 2 that I'm going to take a quick look at, and it's going to be EA Games and Qualcomm. And I'm going to explain why they almost made the list, but maybe they might give you guys some idea for the market in the future. So let's get started. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's go, right? First one is EA Games. For those familiar with me, I am super bullish in the gaming market. I believe the mobile gaming world is still in early stages as this expands into Latin America and into Southeast Europe, right? Southeast Asia, my apologies. But Electronic Arts, not just for that, they also have a huge catalog. But first, let's take a quick look at the stock. So this is traded under the Nasdaq as ticker EA. Very big company, currently has a market cap of $38 billion, really well known. And we can see right now the stock price from its 52-week high has just recently seen some form of downturn. It's down about 10% right now. And in today's episode, we're going to take a quick look at things like fundamentals, like technicals, and valuation metrics, right? So we are going to look at a lot of stuff. So EA Games, right? First, let's try to understand who they have and some of their featured games. Their biggest franchise is FIFA. This is where they make a good portion of their money. But they also have some well-known franchises like Madden, like Sims, like Apex or whatever is pronounced, and Battlefield 2042. So if we take a look, this company has recently seen a nice dip in price. Most of the dip actually came in this past week. And it's because the game has recently announced that they are delaying the release date of Battlefield 2042. So Battlefield 24, and I believe this is actually giving investors some form of buying opportunity with this dip. This overall dip, I want to say it's not. Battlefield mentioned, hey, we're released. It was originally expected to release in October. Now it's releasing November 19. Battlefield says, EA Games says, regardless of the delay, the numbers we gave you on guidance for the full year are still super strong, and we don't believe this is going to change anything. So that should give some confidence to investors. At the same time, though, one of their competitors is releasing. Call of Duty by Activision is releasing in November as well. With the previous release date, Battlefield was coming out first, which kind of gave consumers the ability to purchase it first, right? Now that Call of Duty is coming out first, there might be some consumers who only would buy one or the other, and because Call of Duty is coming out first, it might kind of push off some consumers from buying Battlefield afterwards. So that's the fear a lot of investors are coming out with. Even though November 19th is still before the holiday season, before Black Friday here in the United States. So I believe the numbers will still be somewhat strong for EA Games. I mean, if we take a look at their most recent earnings, we can see they kind of gave estimations for net bookings. And if you're looking at a gaming company, net bookings is probably the best metric to look at opposed to revenue. But net bookings, we can see for the full year of 2022, which just started, right? Their most recent quarter was actually quarter 1 for fiscal year 2022. So right now they're in the middle of quarter 2. So for the full year, for the fiscal year of 2022, they're expecting nice growth. And this is what should really, I want to say, be the driving force of the gaming market. A lot of people believed, hey, now that COVID is done, gaming market is gonna tumble back down. And I believe this is why a lot of gaming companies have kind of seen quite a pullback, because they believe that demand will no longer be there. But here, based on their guidance, 2022, and it's pretty much, it just started last quarter, right? It's pretty much still growing at impressive levels. Obviously, if we take a look at year-to-year basis, I want to say another thing kind of driving stock prices is in the year-to-year basis for the quarter 1 fiscal year of 2022 revenue, which was this past most recent quarter, they did see about a 4% decrease in net bookings. in total net bookings, right, for quarterly. And this is kind of like showing, hey, you are saying that estimates are going to be up for the full year, but you're showing me right now quarter year-over-year growth is down. But at the same time, right, quarter one, that's between, I want to say, May and June, the beginning of May and the end of June. And that's not a normal gaming time, right? There's not much holidays. People are still in school, not major vacations. So for them to be only a 4% year-over-year drop there, I believe there's nothing to really worry about in the gaming market. And later on, we are going to take a quick look at valuation metrics and stock prices. But next, let's jump into the second stock that almost made my list for tomorrow's episode, and that is going to be Qualcomm. But first, let's take a quick listen to today's sponsor, guys. A great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Qualcomm, right? This is a semiconductor company. Like I say, every time I talk about semiconductor companies, I get super excited. This is where my fields of study and career used to lie. Now I'm a YouTuber, right? But Qualcomm traded under the NASDAQ as ticker QCOM. Today, the stock price was actually down 3.26%. And from its 52-week high, this stock has definitely seen better days. It's down about 18.7%. This is a company super profitable. They pay a nice form of dividend of around 2% right now. And it is a big company of a market cap of $150.8 billion. So for those not familiar with Qualcomm, they provide solutions in numerous technologies. For example, they provide chips that do Wi-Fi, that help with like the Wi-Fi, with audio, with RF system, with processors. Some of the major things are they do create processors that go into mobile devices. They also have solutions for the VR and the AR market. Another thing I'm super excited about Qualcomm. So let me say Qualcomm, I wouldn't say is the heaviest growth stock in my opinion. But it is in an important market, right? The automotive market, cars are becoming smarter. The AR/VR market, the mobile market, the laptop market, I believe these are all markets that are going to continue to grow and need the solutions that Qualcomm provides. Most recently, Qualcomm in March 16th of 2021, they completed an acquisition of Nuvia. And this is kind of increasing their CPU roadmap. Qualcomm is actually headed to create high performance CPUs to battle some of the leaders out there. And Qualcomm definitely has a great form of engineers right now. So I'm not gonna push them to the side right now. It could be some heavy competition, but I'd rather see some numbers first. But they are also expanding into new markets. I want to say Qualcomm, right? One of the major reasons is overall chip shortage, right? With chip shortage, what do you have? Qualcomm probably has to pay more for its inventory, right? For its raw materials. It has to compete a lot with all the other players on making sure their products are being manufactured by some of these foundries, right? So a lot of competition right now in the semiconductor shortage is definitely affecting companies like this. And it might have some investors worried to some extent. It might have some other investors excited about the potential growth as well. If we take a look at their most recent revenue, we can see most of their revenue actually comes from handsets. So these are your mobile devices, your tablets, and products like that. That's where more than half of this company's QCT revenue comes from. Then you have, and that actually grew 57% compared to the same time last year. And we're actually looking at third quarter's fiscal of 2021. The RF front grew 114%. Strong growth there, right? The RF market is still improving, and we can see the huge demand for there. The automobile market grew 83%, and again, pretty impressive. I do believe the smart car vehicle is going to need more and more chips. And finally, Internet of Things grew 83%. So overall, this company is growing at strong revenues. It's doing things like stock, like dividend payments and stock buyback, I believe. Yep, repurchase of buybacks. It did in quarter 3. So overall, both these companies, in my opinion, could have made the list for tomorrow's episode, but unfortunately I found some other picks instead. But if we take a quick look at valuation metrics, first, for me, both of these are big companies. They are already profitable and making money. So I think the best way to look at it is EV to EBITDA forward. We can see it's Electronic Arts right now sitting at about 14.05. If we take a look compared to, these are levels first seen, I want to say, in early summer of 2020. So stock prices, even though stock price is still pretty high compared to where it's been in the past, fundamentals are right there with it to kind of match it. So I don't believe EA Games is anywhere overvalued right now. If we take a look at Qualcomm, EV to EBITDA forwards right now sitting at 12.35. In the past few months, it definitely seems like it's been sitting at attractive levels, and these are at levels actually lower than pre-COVID. Right, so I want to say both Qualcomm and EA Games, I believe, are giving investors some form of buying opportunity at these levels. They almost made my buying list, but they didn't. I only have to choose 4, and they didn't make the cut. I believe if I already had them in my portfolio and didn't feel like diversifying too much, these would have made the cut. But let's take a quick look at technos. First, let's start off with Qualcomm. We can see Qualcomm right now not overextended in stock price at all. Sitting at very attractive levels. If we take a look at EA Games, same thing could be said. Not overextended, sitting at attractive levels. These would be times where I wouldn't mind opening up a base position on both these stocks. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.